Distinguished members, ladies and gentlemen, good morning to all of you. So are we ready for the day? Yes. So we are ready for the day. Okay, with the positive vibration coming in, my topic for the deliberation today is intrastate, interstate nature of supply of goods and services. So I will try to catch up everything pertaining to supply, which is going to be a taxable event. So let's see how this taxable event under GST regime, whether clear or not. And the term supply, how it is being defined in post-GST regime, and how it is going to play important role when we compare the term manufacture, sell, and rendering of service. Let's start with the first point, important point. I want to take you through a journey of GST. When I talk about journey of GST, first important parameter, with the GST coming in on July 1 or September 1, $1 million question, right? Yesterday at PSD Management Committee meeting, we have invited past chairman, only 17 days, he has retired from CBC chairperson position, Mr. Najib Saha. He came yesterday and this question was posted to him, please tell me, GST is coming in from July 1 or September 1. And I'm going to throw some important parameter for all of you to decide whether GST coming in from July 1 or September 1. Just as a backgrounder, we all know first model GST law came on public domain on 14 June 2016. And first model GST law, if you look at CGST, there was 162 section, 5 schedule, 1 GST valuation rules. And IGST Act was having 33 section, which you'd be recalling. But now what happened, this first model GST law got revised on 26th of November 2016. So 162 section got converted into 197 section, 25 chapters got converted into 27 chapters, 5 schedule reduced to a 4 schedule, and GST valuation rule was not there. IGST Act was having 24 section and 11 chapters, but now the final GST law. If you look at final GST law, it was placed before Lok Sabha on 27th March 2017, got passed on 29th March 2017, which was later passed by Rajya Sabha on 6th of April 2017, and Honorable President has given assent on 12th of April 2017. So what happened? CGST bill, IGST bill, UTGST bill and compensation bill is now Act. CGST Act 2017, IGST Act 2017, UTGST Act 2017 and compensation. Now law is final. Now all the state 31, including 2 union territories with state legislature, has to pass model SGST law, and Telangana is the first one. Day before yesterday, they have passed model SGST law as SGST Act. So 30 has to follow, but important parameter. There are certain states, those who are non-BJP rule state, has not yet ratified 122 Constitution Amendment Bill, like Kerala, like Karnataka, like West Bengal. You know Mamutadi. It is not yet ratified, and we are talking about model SGST law need to be passed by state assemblies. And we are all targeting July 1, 2017. This was the first question I posted to past chairman CBC, asking him whether July 1 is going to be effective date for GST implementation, point number 1. Second point which I raised to CBC chairperson, sir, you are talking about July 1, but GSTN, which is going to be backbone for GST, we are moving from paper taxation to paperless taxation. GSTN network is the backbone of GST, where we are going to have registration, payment and return filing. You have attended the seminar on 11th April and we have posted number of queries to CEO Mr. Prakash Kumar. We posted a query, are we ready from GST and network perspective? Let me give you some highlight of GST and how it is progressing today. There are around 70 ASP and GSP. And I'm sure you must be knowing the nomenclature ASP and GSP. Do you know that or not? Yes or no? So 11th of April, you were only asking, kitne transaction cost lagenge? Right? Pay attention on the technical terms, these are important. And I will request each one of you, instead of here and there, focus on the subject matter, which should be the learning for ourselves. ASP means application service provider. How the GST network will work? GST network, they are developing this network, but we have to upload our invoices. Being supplier, if it is a B2B transaction or B2C transaction more than 2.5 lakh rupees, I have to upload my each of the invoices on GST network. How it will happen? I'm running on SAP, Oracle, Tally or any accounting package. Can I upload the same invoice and GST requisite encrypted data directly to GST network? Possibly yes, but might not be possible. SAP and Oracle may have number of fields available. Maybe you are having 100 fields available, but GSTN does not want 100 fields to be uploaded on GSTN. They want requisite particulars in B2B invoices, tax invoices need to be uploaded. So what happened? Out of 100 particulars, you have to pick the requisite data, which required for GST perspective. So what happened? By push or pull technology from your software, there would be one connector, ASP, application service provider, approved ASP. GSTN has already approved number of ASP. What they are doing, they are preparing connector or software. With this connector or software, they will pull the data or push the data from your software, ERP. And that data get encrypted in GST requisite form. And with GSP is nothing but a firewall. Nothing but a firewall. So ASP is converting your raw data into GST requisite data. And through firewall, GSP getting uploaded on GST network. So GST network going to work with the help of ASP and GSP. They have appointed around 70 ASP and GSP, but only 10 are effective ASP service provider today. They are only developing connector. So next question which I posted to past chairman CBC, I said, sir, this GST network is ready. Leave whether trade is ready or not by 1st July. I'm asking whether GST network is ready. And as far as I know, they have only provided API of GSTR1 outward supply return. 3 returns are must, outward supply by 10th of next month, inward supply by 15th of next month, and consolidated by. GSTN has given only API of GSTR1 to ASP for development of connector or software that will push or pull the data from your ERP. What about GSTR2 and then GSTR3? It will take time. I'm standing on 19th April and July 1 is the target date. So this was the second question I posted to CBC chairperson. Are we ready from GSTN perspective? Answer is not 100% correct. Maybe they are preparing themselves. Maybe they will get veto power by Honorable Prime Minister saying that no GST has to come from July 1. then no choice left. They will work 24/7, and we may see the light of the day on July 1. But third question comes, okay, you may implement GST from July 1, 2017, but whether trade is ready. Trade consists of SME sector, MSME sector, large company and foreign MNC. Pertaining to large and foreign MNC, no problem. What about SME and MSME sector? We have to create a lot of GST awareness program. When we are moving from paper taxation to paperless taxation, we require many programs to be conducted for this sector. They are only manually following the indirect tax provision. They only know how to raise invoice, that to Kacha invoice. Now they should be brought into GST net. Are we giving proper education to SME and MSME sector as a GST awareness program? Let me tell you, I know Central Excise and Service Tax Department is conducting some of the program. But what about the VAT department? I have not seen they are doing much of the program in the state for creating awareness for GST. So this was the third question I posted. And then I summarized my observation to past chairman, CBEC. I said, sir, yes, July 1 looks positive for all of us together. But don't come with a half-hearted approach. Get your GSTN ready. Get your GSTN ready. And if required, postpone it to 1st September 2017 and do lot of GST awareness program. You have to educate SME and MSME sector how registration need to be done, how invoice need to be raised, how invoice need to be uploaded, and how this invoice would be outward supply, then auto-populated as ITC in GSTR2 and consolidated return. These are the basic. And when we are talking about matching and mismatching, so I'm uploading my invoice, I'm your supplier, you all are recipient. You will get credit on the basis of invoice uploaded by Bimal Jain. If Bimal Jain does a mistake, either he's putting wrong figures in terms of value or taxability, or he's not uploading the invoice, how it would be auto-populated? And if it is auto-populated with mistake, how you are going to correct it? Add, modify and delete. What happened? I'm supplying goods on 30th June 2018, let's assume. You are receiving the goods on 2nd July 2018. I have uploaded my invoice. It would be coming in the month of June. But can you take credit in the month of June unless you receive the goods and services? How those situations going to be handled in GST regime is the important one. So GSTN is a important backbone for GST, but GST awareness is more important. How to do all needful on GSTN network, and that too with the help of ASP and GSP. Nevertheless, this was a question from July 1 and September 1. Let me check your vibration. If I pose this query to all of you, are we ready from July 1? July 1? July 1 virtually. But if GST coming in from 1st September, it will be in between quarter. Big chaos. I do not know, but ultimately I can only request all of you that get yourself prepared for July 1. Don't wait whether the final law or rules. Now when I'm saying rules, I would like to highlight there are 11 rules on public domain today, which is yet to be finalized. You must be knowing 5 rules initially provided in September for registration, payment, invoice, return and refund got revised. And they have brought 4 rules, new rules: valuation, composition, transition and input tax credit, for which government has also sought feedback and suggestion by 10th April, which we have submitted. And I'm going to take up one important parameter today under transitional credit. Later part when once ITC presentation is over. And then 2 new rules are being given just 3 days back. Draft rules for audit and assessment, and another one, e-way bill. My invoice need to be uploaded. On that basis, you will get the credit. But still government think movement of goods, supply of goods through a e-way bill. I do not know whether it is easing movement of goods or not, but of course this is a big hue and cry has started. And what is the threshold amount they have kept? Supply of goods exceeding 50,000 rupees. And they have put the criteria that up to 100 kilometer way bill valid for 1 day. Just imagine, it's a Delhi situation. If I'm moving from Delhi to Gurgaon, 30 kilometers sometimes takes 3 hours, 4 hours time, and that to 8, I can't get inside. And then we are talking about 1 day with 24 hours validity. What happened? I will continuously raising e-way bill and cancelling that e-way bill because my truck has not moved. We know all these aspects, but still the kind of draft rule has come. We have to give feedback and suggestions. So my request to all of you would be, please look at those rules which are not final. We can still give the feedback and suggestion. You may say that what is the benefit giving feedback and suggestion unless it is being heard by the government. I can only say advantage is you keep on crying for your own right. May be given or may not be given, but unless you cry, mother is not going to feed you. So cry is the utmost criteria to look for. And we should continue to do that. So 11 rules are on public domain, yet to be finalized. And this was the last component before CBC chairperson asking him whether July 1 can be the tentative date for GST implementation. So I have given all food for thought. Let me start with my component now. When I talk about GST, next important parameter. Why we need GST, I will not take much time, but to highlight, we need GST for 4 important broad parameters. Multiplicity of taxes, be at central level, be at state level, will go away. Around 17 indirect taxes merging into one basket, and this basket going to be called GST, advantage 1. But there are many other queries. Whether road tax, mandi tax, octroi, stamp duty subsume in GST. Are you getting my voice? So it looks like these are not getting subsumed in GST. Octroi, of course. Octroi is being levied by local municipal Maharashtra, Mumbai. Entry tax is subsuming. What about octroi? Big question. We'll get clarity in time to come. And it was an issue discussed when we have seen proceedings on 3rd August 2016 when 122 Constitution Amendment Bill was passed by Rajya Sabha. Honorable Finance Minister has said that octroi will get subsumed in GST. Let's see, let's wait and watch. Coming to the second component, we are struggling with the cascading of taxes today. You know, central excise duty charged by a manufacturer, no credit in the hands of VAT dealer, unless he is a manufacturer. Am I clear? Or first stage dealer or second stage dealer. VAT dealer charging VAT to a chartered accountant or to a service sector, no credit in the hands of service sector. Or service sector charging service tax to a VAT dealer, no credit in the hands of VAT dealer. CST, entry tax, luxury tax, Swachh Bharat cess, Krishi Kalyan cess, credit available to a provider but not to a manufacturer. So such kind of taxes, to certain extent, cascading will go away to certain extent, but it will continue for 5 specified petroleum products: petrol, diesel, crude petroleum, aviation turbine fuel, and natural gases. That will continue to be central excise duty applicable and VAT applicable. So tell me any sector they are not using petrol and diesel? They will be procuring petrol and diesel, would be paying central excise duty and VAT, of which no credit. Cascading will continue to certain extent. India is also struggling with double taxes. Of course, certainty will come. This is the utmost advantage I could see. Certainty will come. In GST, a transaction can either be supply of goods or supply of services. But if you want to look at existing regime, we got AC restaurant, prominent example. On 10,000 rupees, complete VAT charge, and then on 40% of 10,000 rupees, service tax charge. Software, construction, works contract, right to use of movable goods. These are the example of double taxation. Last and foremost, uniformity will come in GST. Today we are in NCR region. Gurgaon is being governed by Haryana VAT. Is not applicable in Delhi, 10 kilometers away. Delhi is being governed by Delhi VAT provision. But Delhi VAT provision is not applicable just 10 kilometers away in Noida. So we got state barrier today because each of the state follow their state VAT provision, right? And it looks like we got 29 countries within the Union Territory of India. You start with a registration amount, return filing, payment, assessment, adjudication. If you are a client in West Bengal, then you must be Bengali guy to handle the Bengal VAT provision. Otherwise, Bengali VAT will not talk to you. He will always say, "Ese gacho." If you are a Keralite guy, he will speak in Keralite language. Tamil will speak in Tamil language. So today we are being divided on language, religion, race and caste. But GST, I'm saying, going to be a Bible, Gita and Quran. Irrespective of any language, any religion, any race, any caste, whatever provision applicable in Delhi, going to be applicable pan-India, except, so much of privilege. So much of privilege. I was happy when I've seen the first model GST law and revised model GST law. That law was saying it is applicable all over India, including Jammu and Kashmir. And I've said number of times I feel proud that Jammu Kashmir become my and our integral part of India. But I do not know this final law is talking about. It is applicable all over India except. So I do not want to make any political comment here. But Article 370 playing important role for their safeguard. But next question will remain. If Jammu Kashmir has their own GST provision, how can the credit would be available when we purchase from Jammu and Kashmir to other part of India or supplied from other part of India to a Jammu Kashmir? Wait and watch. But otherwise, GST law which is applicable in Delhi going to be applicable pan-India irrespective of any language. So I need not be Bengali now. If I know what is GST provision in Delhi, I can handle Bengal client. I can handle Keralite client. And for you, when you are working for a company, you need not require to search for Kerala VAT provision or Tamil Nadu VAT provision. If you know what is applicable in Delhi, then over phone you will say, this is applicable in Kerala or Tamil Nadu or AP or Telangana. Irrespective of any language, advantage, uniformity will come. We all become Indian citizen now, proud Indian citizen, irrespective of any religion, race, caste and language. So this is the realistic term of one nation, one tax. Next topic. Having four advantage, multiplicity, cascading, double taxes and uniformity, India is looking at dual concurrent GST model. Am I right? Dual concurrent GST model is nothing but center and state both are going to levy taxes simultaneously, concurrently on both goods and this model is being followed in Brazil and Canada. But why India is looking at this dual model? Political compulsion. State want their own autonomy. That is the reason we are looking dual concurrent model. Otherwise, the best model could have been national GST. Only center, Modi ji levying taxes with revenue sharing with the state, Arvind Kejriwal ji. But why it is not being adopted? Federal structure, democratic country, state want their own autonomy. Otherwise, national GST model is being followed in Australia and China. China, immediate competitor. But we can't do that. So dual concurrent GST model, how it is going to work, the next question for our intrastate and interstate. I will take few minutes. I know you must be knowing taxability of intrastate and interstate, but I will take 5 minutes for the clarity. Maybe you are listening first time, but I'm sure you must be knowing the taxability for intrastate and interstate. Only 5 minutes. But this 5 minutes, I need vibration from all of you. Are you ready? So you have done it. I'm just checking out, right? For intrastate and interstate within India, in our GDP, there are two important goods and services on which taxes are being levied. Am I right? No, vibration is not coming. There are goods and services. And there are two major transactions, intrastate and interstate. Nothing else within India. Am I clear? Otherwise, we got import and export. So what happened for intrastate supply of goods? Supply of goods. If I'm supplying goods today, then on 100 rupees, I'm in Delhi, you're in Delhi. On 100 rupees, I'm applying 12.5% central excise duty, and I'm applying on an average 14.5% VAT. Am I clear? First question, if you're a VAT dealer in Delhi, can you take credit of central excise duty? You can't take. Can you take credit of VAT? And second thing, VAT is calculated inclusive of central excise duty. This is what the existing regime. What happened post GST? Post GST on supply of 100 rupees, I'm going to apply CGST and SGST. Am I clear? Now there's certain mantra in GST. I, on a lighter note, always say when we started our accounts, when either you may be chartered accountant, company secretary or cost accountant, whenever we have done accounts, 3 golden principles. Debit what comes in, credit what? But we never question that. Similarly, GST has got some mantra and we have to memorize those mantra. It has got some logic behind it, but we have to keep it in our mind. These are the mantra you have to keep it in your mind. The first mantra says that CGST charge will go to CGST credit account. So CGST will go to CGST credit account and SGST will go to SGST credit account. Next question comes, what will be the GST rate applicable on supply of goods? You know GST Council has given 4-tier rate, 5%, 12%, 18% and 28%. And 28% with cess. Cess they have prescribed for luxury cars, aerated beverages, tobacco and pan masala and coal, and one item they have kept open. Other item. You know that, right? Do you know that or not? The other item left out, other. Other means as and when notified by the. So you never know this compensation cess may be levied for any other item as notified by central and state on recommendation of so-called GST Council. So this question was again posted yesterday to CBC chairperson. I said, sir, now when you're talking about compensation cess, we understand this compensation cess is going to be levied to compensate to the manufacturing state, origin state. But this other item kept blank is a big Pandora box. Why you have kept other item? Answer given by Honorable past chairman, he simply said, Mr. Jain, only for the sake in case required. In case required. Then only we are going to levy. Otherwise, intention is not to levy compensation cess. But we all know in real practical case, we never know what will happen after a minute. So notification may come and may be levied on any other item. In case they feel like the money which they are targeting as a compensation cess is not sufficient enough to compensate to the origin state or manufacturing state. Having said this part, now what this fitment of goods into respective category government is working on. And they are going to decide by 18th and 19th of May, right? And we all are targeting July 1 as the effective date for GST implementation. So we still don't know under which slab my goods going to fall. But what is the formula given? Formula given is, if today my product is chargeable to 6% central excise duty and 5% VAT, so 11% indirect tax incidence, then in all probability, my goods is going to fall under slab of 12%. But can we apply this kind of formula blanket? Answer is big no. There are so many MRP based products, like color television, washing machine, refrigerator. Standard rate of central excise is 12.5%, but effective rate turned out to be 8% or 7%. And then 14% added with the VAT, effective rate is 20%. So this goods must fall under the slab of 18%. And maybe some of the items are need of Aam Aadmi. You can't apply blanket that today it is 26% or 27% indirect tax incidence, it is going to fall under 28% slab. We have to apply practically what is the effective rate after abatement and what are the goods important for Aam Aadmi. Having said that, this is goods taxability rate, but we do not know the fitment as on date, which would be out only after the meeting on 18th and 19th of May. What about service taxability? What will be the rate applicable? Nothing is being stated, but what we are hearing, the GST standard rate which is going to be applicable for service taxability would be 18%. Increase from 15 to 20% hike. And we all are talking about GST will bring in 2% incremental GDP growth. Where from it will come? More than 60% of GDP comes from service sector. And if GST standard rate applied 18% as against 15%, then immediately there would be service price inflation. I know service sector will get credit. Today they are not getting VAT credit, but tomorrow they will get credit of GST paid on goods, right? To that extent they would be factored in, but still there would be 1 or 1.5% remain in the price inflation. And 60% of GDP comes from service sector. So let's leave this point, come to the example which I was narrating. Let's say I'm supplying goods and my goods is falling under 18% slab. Then this 18% need to be divided between CGST and SGST. Am I right? Maybe 9%, or maybe 8% and 10%. Yesterday Kerala has demanded that this 18% component need to be divided between 60:40 ratio. They are saying central excise duty is 12.5, VAT is on an average 15%, then they should get 60% of 18% slab. So it is not like 9%. It may be 8% or, but to be decided by GST Council. But for practical example, let's assume 9%. So what happened on supply of 100 rupees, I'm going to apply CGST 9%, SGST 9%. You are purchasing goods from me. What you will do, you will take credit of CGST in CGST account, SGST in. Then you are selling the same goods at 150 rupees within the state of Delhi. 150 rupees. Again, you are going to apply 9% CGST and 9%. Your liability would be 13.50 paisa CGST, 13.50 paisa. No sound is not coming. 13.50 SGST. So mantra number 1 says CGST credit can be used for CGST liability. SGST credit can be used for only condition you should not use CGST credit for payment of SGST or vice versa. Can you keep it to your mind? First part is over. So intrastate, whether supply of goods or supply of services, taxability would be like this. Hope clear to all of you? What happened for interstate? But before I move to interstate, can you see the advantage when you look at from existing indirect taxes? VAT dealer is not getting credit of central excise duty. Drawback. But post GST, a VAT dealer will get credit of CGST component, which is towards central excise duty. Cascading is going away, and it will bring efficiency and competitiveness in the pricing. And once pricing become competitive, demand goes up. Because pricing coming down, demand goes up. Demand goes up, supply goes up. Supply goes up, GDP goes up. For goods taxability, of course, advantage. But for service taxability, wait and watch. Hope clear to all of you? And second, SGST is not calculated inclusive of CGST. Whereas today, VAT is calculated inclusive of central excise duty. Interstate, from one state to another state. Let me remain in Delhi and you go to Gurgaon. You are the VAT dealer in Gurgaon. If today I'm supplying goods, then I'm charging on 100 rupees, 12.5% central excise duty and 2% CST against form. If you don't give me form C, then local Delhi VAT rate as applicable. This is what the provision. Next question comes, can you take credit of central excise duty? Unless you are a manufacturer or first stage dealer or second stage dealer. Can you take credit of CST? 14.5% is a cost. Not only 14.5%, CST calculated inclusive of central excise duty. So 14.75% is a cost. Am I right? Yes. So we don't prefer to buy interstate. What we normally do, we open the warehouses in all the state just to raise the taxable invoice. Do we require post GST? Let's listen. If I'm supplying from Delhi to Gurgaon, post GST regime, on 100 rupees, I'm going to apply IGST. IGST is a central levy and sum total of CGST plus SGST, meaning thereby on 100 rupees, I'm going to apply 18%. Am I right? Of which, mantra number 2, you will get credit of IGST in IGST credit account. Am I clear? You got the credit in IGST credit account. Now you are selling the same goods in Gurgaon at 150 rupees. So what would be your output liability? No, I'm not getting sound. CGST and SGST. So 13.50 paisa CGST, 13.50 paisa SGST. Am I clear? But you got credit of 18 rupees IGST. Mantra number 2. IGST credit can be used sequentially. First for IGST, then CGST, then SGST. Can you keep it to your mind? This is a mantra. Shall I repeat again? Last portion. IGST credit can be used sequentially. First for, second for, and third for. So next time whenever you are coming, you have to sound along with me. Ma'am, will you be sounding with me next time? So IGST credit can be used sequentially. First for, second. Perfect. All right. So let's solve the query. I got 18 rupees IGST credit, but I got output liability of 13.50 CGST, 13.50 SGST. So I'm going to use first for CGST. 18 minus 13.50, nothing to be deposited in CGST account. 4 rupees 50 paisa left in IGST credit account. Can I use for Haryana SGST? Yes. 13.50 minus 4 rupees 50 paisa, I will deposit only 9 rupees in cash in Haryana SGST account. Right? Right? Now let me clarify another part. We are moving from origin-based to destination-based tax. GST will accrue to a state where ultimately goods and services are going to be consumed. So in this case, I am supplying from Delhi. Arvind Kejriwal ji will not get anything. Which state going to get GST component? Haryana. So in this practical example, you have paid 9 rupees in cash in Haryana SGST. And 4 rupees 50 paisa, you have used center credit for payment of state liability. Modi ji will transfer this money to Haryana. So 4 rupees 50 paisa from center to the state, 9 rupees you have deposited in cash. Ultimately, Haryana got 13.50, which they are supposed to get on destination-based consumption tax. Am I clear? So what happened? Now, if you look at the advantage, look at the advantage. Today, central excise credit is not available. CST credit is not available. CST calculated inclusive of central excise duty, everything gone. Bimal supplying from Delhi to Gurgaon, IGST applicable, of which credit is available, and this credit can be used for intrastate and interstate liability. So what happened? This cascading gone. State barrier gone. India become national common unified market. India become national common unified. Today, I am not in a position to supply in Kerala and Tamil Nadu. I may be a small timer supplier of goods or services. But tomorrow, none can stop me to supply from Delhi. I need not require to go to Kerala and Tamil Nadu or Bengal. To know Bengali, then only I can go. No way. I can supply sitting at Delhi to all the India place except Jammu and Kashmir. I would be charging IGST, of which credit would be available to my buyer, and he can use this credit for payment of intrastate liability or interstate liability. So what happened? India become national market. So this warehouse maintained in 29 states, do we require? We don't require. We can consolidate now. So GST is not only biggest indirect tax reform, it's a biggest business reform. Hope clear to all of you? Having said that, now let's move to taxable event, which is the topic for me as well. What is taxable event for excise? Any doubt? No doubt. Manufacturing of goods. What is taxable event for VAT or CST? Transfer of property in goods, including deemed sale. What is taxable event for service tax? Okay, this question always like this kind. Provided or to be provided. But rendering of service is a taxable event. We may pay service tax on advance money, but that is not the taxable event. Taxable event will remain forever rendering of service. Now, for GST, what is taxable event? Supply of goods or services or both. Now, I'm only questioning myself, and I wanted you to throw some light. The term manufacture was defined under Section 2, subsection F, Central Excise Act 1944. 1940, we are in 2017. If you look at existing indirect tax dispute litigation today, I'm sure more than 20% dispute only pertaining to a point whether activity undertaken is a manufacture or not. The term manufacture is not settled as yet. Still, we get lot many judgment from Honorable Apex Court, activity undertaken is a manufacture or not. When you say activity undertaken is a manufacture, department will say. When you say it is not, department will say. So this is the positioning of term manufacture. Do we want to repeat the same story for taxable event in GST? Yes or no? No. Those who are not sounding, they won't. So we don't want, right? But irony is that the way the term supply is being defined in GST is going to be another disaster like manufacture. How the term supply is being defined in GST is an irony. And that is going to be taxable event of biggest indirect tax reform since independence. The way the term supply is being defined, they are saying supply includes without defining what it. So term supply is subjective for individual interpretation. Right? So he may say something, what is supply? I may say something different, what is supply? So term supply is subjective. And then it says includes, inclusive definition. All forms of, I am raising my both the hands, all forms of supply of goods or services or both. After reading this line, I am posting two query to you. Do you see anything left out under this universe? Nothing, right? Nothing. All forms of supply of goods are. And next question, do you require anything else thereafter in supply definition? Do you want or not? No, you don't want, but government is again by, for, and us, right? Law is saying there are lot many things which we have to keep it to our mind. Keep it to our mind. Then this definition continues further and use the term such as if we have not understood it. Such as sell, transfer, barter, exchange, licensing, leasing, renting, disposal. 8 terms are being there, but none of the term is being defined in final GST law. So, subjective definition, inclusive definition, such as 8 terms, but none of the term is being defined in GST law. Made or agreed to be made for a consideration by a person, not to a person, by a person, in the course of furtherance of business. Let me do 2-3 case studies. Let's say I'm a chartered accountant. I'm going to a restaurant to have dinner. I've taken dinner, good Levy's dinner, 10,000 rupees. When I'm supposed to pay, my purse was not there. Now that fellow is asking, Mr. Jain, you have to pay money. If you're not having money, go backside. You understand all this, right? So just to save my own face, I said, okay, you take my watch. Please tell me whether this transaction can be considered as barter. He wanted 10,000 rupees, but my watch price is 50,000 rupees, but used watch. Please tell me whether this is a barter. It's not barter. Why not barter?
Barter means same, almost same value being material being exchanged.
Who said? Oh, no. Barter means you are giving rice, I am giving you wheat. Barter is like that. Then the valuation is a different thing. First you determine whether this is barter or not. Of course barter. Okay. It will not be barter. Reason is very simple, because I am not into the business of watches. If I am into the business of watches, then it is in the course of furtherance of business. Right? I am only paying consideration in kind. There is supply only by restaurant to Bimal Jain. And money is being paid in kind instead of monetary consideration. Hope clear? But if I am into business of watches, then it is barter. First part. Second part, do exchange. I'm offering exchange offer. You come with your old mobile and I will give you new mobile. And new mobile price is 24,000 rupees. You give me your mobile, let's say your used mobile 4,000 rupees. First you tell me exchange offer, there are 2 supply or 1 supply? 2 supply or 1 supply? Remain 1 supply. Remain 1, because you are not into the business of mobile. You are only coming with a used mobile worth 4,000 rupees, giving it to me, and I am giving you new mobile of 24,000, you are paying only 20,000 rupees in cash. Am I clear? 1 supply. But next question will come on what value GST applicable. Today what value VAT is applicable? 20,000 rupees, not 24. Only 20,000. But if you go to draft GST valuation rule, which is there on public domain, they have given this example, live example, which I am giving it to you. And they wanted us to levy GST on 24,000 rupees. So exchange is going to be a costlier one. That is what the rules provide. Even though net consideration is 20,000 rupees. Now this is what the second component. But I'm saying that when they are using 8 terms, they could have given clarity definition of these 8 terms, right? Nothing is being provided. Then the definitions goes down further, importation of services for a consideration, whether or not in the course of furtherance of business. This is what the definition. And since this is a technical class, so you have to really understand those provisions. Importation of services, let's say you're importing services from Bimal Jain. Bimal Jain is sitting in USA. For a consideration, right? If there is no consideration, whether GST applicable? GST applicable? Say louder. No. Whether or not in the course of furtherance of business. But there is one Schedule 1, and Schedule 1 has got 4 specific entry. 4 specific entry. Entry 4 says importation of services by a taxable person, which you are, from a related person or your any of the establishment situated outside India, when made in the course of furtherance of, even though without consideration. So let me do 2 case study with all of you. Do you want to see the case study? So let's look at the case study and let me check whether you all are getting it or not. Because normally I don't open my PowerPoint presentation, but I thought of bringing some, point for you. And let me check, let me see whether this particular example and take you along. Okay. Okay. This provision is, I have conveyed, now I will do case study straightforward. The first case study. Whether provision is clear to all of you, first of all. Provision is clear? Look at the first one and you have to solve it. I have created situation in India and outside India. Mr. A is importing services from his brother who is located at USA. And his brother is giving architect service to Mr. A and there is no consideration. Free of cost. Whether GST applicable. So look at, I'm just pausing, I'm not giving answer, I will tell you. Okay, let me first then take you to the provision so that you all are with me. What is the provision says? Importation of, I want answer correct from each one of you. Pay attention. Excuse me, ma'am, just close it. Just look at this part, right? What is the provision says? Importation of services for a consideration, whether or not in the course of furtherance of business. This is the supply definition. It need to be read with entry 4 of Schedule 1. What entry 4 says, import of services by a taxable person, which you are, from a related person. So we have to understand the meaning of related person. Husband and wife is a related person. Employee and employer are related person. Or from any of his other establishment outside India in the course of furtherance of business, even though it is without consideration. So you have to just keep it to your mind and then apply. So your test start now. First part. Mr. A is importing services from his brother in USA and he's giving no consideration. Obviously he will not give. Obviously he will not give. But this is servicing for designing of Mr. A's house. Personal. Second parameter, Mr. A is also taking services from his brother, but this is for servicing of his client house. Clear? And third, Mr. A is again taking services and giving consideration. Giving consideration. Now we have to check whether we are right or wrong. Tell me on first case study, Whether GST applicable? Not applicable. Reason is simple. Though both are related, use personal, FOC, not taxable. Any doubt? No doubt. Second is taxable. So all are correct. Third? Okay, so all are master. So next time you would be making presentation. Okay, do this part, one more part. Sorry, yeah. Your branch office is in India and you are procuring services from head office in Korea. Whether GST applicable under reverse charge? Answer is yes. So this is the scenario, but if it is a reverse case, export, branch is giving services, exporting services to Korea head office, whether it is export of services. This is a service tax scenario today, right? Reverse charge applicable, but it is not export. What is GST provision? Same provision. Copy paste. Oof. Okay, so he's saying for export, let's say there's a consideration. Now it is export. What he's saying, let me tell you. You are a branch in Korea and I'm a head office in Delhi. When I'm importing services, whether for consideration or without consideration, it is falling within all two parameters. Reverse charge, applicable. Am I agreeable? Say yes. What is export? I'm giving services to you, right? You're saying it is without consideration. That's what you use the term. Let's say you're giving consideration. It is export now. Why no? Because same service tax provision. Because we are establishment of same concern. Same provision copy pasted in. Reverse charge applicable, but it is not export. Nevertheless. Come to the third component which is important. This is I have done for you. There are schedule 1. There are schedule 1 even without consideration. There are 4 specific entries. The first entry is permanent transfer or disposal of business asset where you have taken input tax credit. This is the only line used. But to understand, let's take practical example. Let's say you have purchased a motor vehicle. And on motor vehicle, GST must have been charged. Now you are permanently transferring even without consideration, with the GST applicable. Why not?
Motor vehicle exempted list में है, so you cannot take the credit on it. So your transit tax is already paid. So why should pay?
अरे लाइट साइड पे इतना डरा क्यों रहे हो? मुझे लग गया भाई ये मुझे डरा रहा है पूरी तरह से. He said मुझे डर लग गया एकदम. बोला क्या पूछ लिया मैंने? Since on motor vehicle I have not taken credit, if I transfer, then GST. Take another example, you purchase a laptop, and after purchase of laptop, after a year it becomes redundant, you are giving to any NGO. GST applicable, even without consideration. Why no? It will be yes, because credit is available on laptop, even without consideration given to NGO. Am I clear about it? Concept is clear to all of you. You have taken input tax credit on a laptop. If you have not, then the answer is correct. Whatever you say. So choice is yours. Choice is yours. But he was on a law point, you are on an artificial point. Normally, otherwise I will take credit. Artificially, if you have not availed credit, no problem. Am I clear? Second point is, so I will not do this part, I'm just skipping this one. Skipping NGO also. Now entry 2, this is very important. Supply of goods or services between related person or distinct entities when made in the course of furtherance of business. This is the only line used, nothing else. But this line is important and I will do 2 case study. Excuse me, I will do 2 case study. stock transfer of goods. Whether this is coming under this provision? It is coming, right? Supply of goods, even without consideration between related person or distinct entities. That is the reason we all are saying stock transfer of goods chargeable to GST. Next question is coming, what would be the valuation, right? So what is the valuation provision? Any one of you have run through draft valuation rule? On transaction value or cost price? Any invoice value. What is any means? Let's say purchase cost is 100 and you're putting 50 rupees. It is okay? That is in proviso. So what he's saying, he's reading rule 2 of draft valuation rule. That is not my topic today, but just to apprise to all of you. It says valuation would be open market value, like kind and quality, cost plus 10%, rule 8 central excise valuation rule, or residue method. But proviso says wherever input tax credit is available, wherever input tax credit, that is the correction in your statement, then whatever open market value can be considered. To my considered view, that you should not value less than cost price. You should not value less than, otherwise you may have accumulation at 1A unit. So you should cost it at cost price. So at least to that extent relief is coming out. But the way it is being worded is still doubtful. If you read the definition of open market value, is going something diagrammatically different. So still I'm not getting clarity, and I posted this query, and this is one of the suggestions on draft valuation rule. So whatever you said, I'm not completely agreeing, understanding your intention, which I'm with you. But drafting is poor and creating some kind of interpretation issue. Otherwise, yesterday we have raised this question. And we said, why can't you have simple one line that stock transfer of goods should be taxable at cost price or cost plus 10%. Then you don't require anything to do. We are well settled. Today we do cost plus 10% or cost price. That is the easiest way to do that. Why we need to have open market value, like kind and quality, then cost plus 10%. If intention was just to put open market value as you want, why they have put so many parameters? Question to you. You are not having any answer. So valuation is not my class, but telling you only that don't assume open market value means as per your sweet wisdom. Had it been the case, why they have said open market value, like kind and quality and cost plus 10% and residue method? They could have said in one line, whatever you want to put it. Not an issue. In favor of. So he is immediately saying, sir, ऐसा मत सोचो मैं आप ही के favor में बोल रहा हूँ. In favor of, but simplicity could have been. Okay. Now next, employee and employer. Employee and employee giving, how many employee here by the way? Employee, number of employee here. So many, yeah. Employee giving services to the employer, whether GST applicable? कितनी relief है नहीं? Registration नहीं लेना पड़ेगा. नहीं? But employer giving services to the employee, whether GST applicable? Read that line and then tell me. Supply of services between related person, an employer and employee are related person, even without consideration. So I offer you lunch, dinner, and so many things I give you in lieu of contract, employment contract. When made in the course of furtherance of business, when I'm giving you lunch and dinner, it's not langar. In the course of furtherance of business. So employer giving services to employee, which is not excluded. Because Schedule 3 talks about, there are 6 entries in Schedule 3, which is specifically stated, it is neither a supply of goods nor supply of, and one of the entry out of 6 says employee giving to the employer. But employer to the employee, even though without consideration, between related person in the course of furtherance of business, technically GST, even service tax applicable today. If you go to service definition.
Provided that to my employee, 0%. GST applicable and on which date?
So he's asking me the same question I posted to all of you. If you provide free lunch and dinner with a GST applicable, if you read this line, GST applicable. Next question will come, what is the valuation? Then open market value. Like, kind and quality, because there is no monetary consideration. Like, kind and quality. So I'm only saying that now, what one important thing they have given, this is थोड़ा गिफ्ट दे देते हैं आपको, जिस पे आप GST मत लगाइए. Provided that gifts not exceeding 50,000 rupees in value in financial year by an employer to the employee shall not be treated as supply of goods or services or. So what is the item coming out? Only up to 50,000 rupees. Otherwise, this question is again being asked, and repeatedly we are asking to the Government of India, sir, please clarify. Tell me, whatever I give in lieu of employment contract. I'm not giving free lunch and dinner, langar. If my factory is located far off, I need to give car also. उसे रहने के लिए घर भी देना पड़ेगा free of cost में. It's all employment contract. Are you going to treat all these transactions? And just irony, when contractor who is giving outdoor catering services, he would be charging GST, right? If my lunch and dinner is chargeable to GST, let's assume beyond 50,000 rupees, I'm an employer. So I must be procuring outdoor catering services or food and beverages on which I would be paying GST. Sir is going to say whether credit is available or not. Here credit is not available, but my output is chargeable to. How this seamless flow would be coming in? And why this 50,000 a ballpark number आया कहाँ से? They are treating everyone as a government employee. As 50,000 तो उन्हीं के माइंड में आएगा, हमारे में तो 50,000 आम बात होती है. हमारे means private players. So where from this 50,000 ballpark, and why all of a sudden 50,000? Why can't you take this average vary from one industry to another industry? Nevertheless, but this is what the provision. Yes. So he is the person who is going to come post GST litigation में कैसे काम आने वाला है? Oh, I'm not saying no. Did I say no? I didn't say no. I know that when you post this query, lunch and dinner is not gift. And it's a part of. So, कुछ मुझे भी तो GST में करना है कि सारा काम आप ही ले जाएंगे. Of course, he's right. Whether this is gift, lunch and dinner continue to be, but in strict terms, in legal strict terms, then that is going to fall under the main provision. Then what happened? No, leave gift now. I'm saying that when I'm giving free lunch and dinner, it's not supply of services, first of all, by employer to the employee. Then I will get into this trap. So if I want to be little more protective, I will make it within 50,000 rupees. First part I will do. And if I'm really aggressive, I will go with you. And I will continue to argue it's an employment contract. It is in lieu of employment contract, irrespective of any amount. So it's a business call, vary from one business to another business as per their own business exigencies. So I'm not commenting, but I'm highlighting the issue for digest. Shall I proceed further? What he's saying, let me take then everyone along. Supply of services between distinct person when made in the course of furtherance of business. Whether there is a concept of stock transfer for services, because head office located in Delhi, where your CEO, CFO, and corporate team is sitting. You got 29 branches in 29 states. Can we draw a conclusion that head office is giving services to the branches? We can draw this conclusion, right? Go to GST valuation rule, some clarity has come. And what this clarity is provided, draft GST valuation rule, wherever ITC is available, your value would be nil, deemed to be nil. Wherever ITC is not available, then only it would be open market value. So clarity for stock transfer for service sector, if corresponding ITC is available, then you need not require to charge GST. You have to read along with the valuation rule. Am I clear to all of you? So it is supply provision read with GST valuation. If my other branch can't take ITC, then it is chargeable. Otherwise, they are saying value should be deemed as nil. Let's move quickly. Head office branch, I have done it. I will not touch base. Principal and agent, quite simple, entry 3. I will not, and import, I have already done. Come to the schedule 2. Schedule 2 determine either a transaction can be supply of goods or supply of, and the specific entry they have prescribed. What are the specific entry? There are 18 entries, 5 entries pertaining to supply of goods and balance 13 entries are supply of services. I want to do 2 case study. Works contract. See, they have said 5 entries are supply of goods, but all declare services, renting of immovable property, construction, IPR, IT software, agreeing to do and not to do, right to use of movable goods, works contract, AC restaurant are going to be deemed supply of service, right? Now, works contract is a big issue for all of us together. What is the difference between revised model GST law and final model GST law? At least this final model GST law is saying works contract only pertaining to immovable property. Only pertaining to, that is going to be supply of service contract. But otherwise, repair and maintenance of car, it's a works contract, no doubt, as per existing definition. But what happened? Repair of car going to be supply of goods or supply of service? Repair of cars. It's a composite supply or mixed supply? Now let me draw. Because I'm not getting answer, let me take all of you together. What is works contract? We understand in normal parlance today. Transfer of property in goods, used in execution of a works contract, and includes construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation, alteration of movable or immovable property. But now it is specifically stated works contract pertaining to immovable property. So pertaining to movable, it is not works contract as per the GST provision. So what happened? Wherever you got 2 or more supplies clubbed together, then you have to identify whether that particular supply is a composite supply or mixed supply. Why we have to do? Because composite supply is stated to be a naturally bundled. Naturally, and mixed supply going to be a not naturally bundled. So if it is not naturally bundled, then the highest rate as applicable. So just take an example so that we can understand. I said repairs of car. Repair and maintenance of car. Is it pertaining to movable, right? I posted this query whether this is going to be works contract in GST regime. Tell me yes or no. Why so low? It's no, right? For sure no. Now, next question comes. In repair, we got supply of goods and supply of services both together. 2 or more supplies clubbed together. Is it going to be composite supply or mixed supply? Composite supply means naturally, Whenever you go for repairing of your car, what is your intention? To buy component or to get the service done? Dominant intention is to get the service. Goods and components are used for providing services. So it's a composite supply, naturally bundled. So this contract would be supply of service contract. So what is going to be applicable? Service GST rate as applicable on. Let's take example, let's continue further. Let's say this contract has got supply of goods, component and component chargeable to 12%. Let's assume. But 10,000 rupees invoicing, out of 10,000 rupees, 6,000 rupees component supplied at the rate of 12% and 4,000 rupees your service charges. But it's a composite supply, naturally bundled, then you are going to apply 18% rate if GST applicable. It may be reverse also. Let's say component 28%. Component 28%. But whole combo would be taxable at the rate of? Am I clear to all of you? No doubt. But are we back? What happened? You know Coney elevator case? 3-member bench, apex court judgment, supply of lift along with the installation. Initially it was stated to be supply contract, supply of goods. 5-member bench overruled that judgment and they say it's a works contract. We are back to the same era. Now dominant intention test, which was not there, because if any contract has got material and labor, it's a works contract as per the recent apex court judgment. But this is now all overruled. We are back to dominant intention test. Now we have to see if anything pertaining to immovable property, construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation, alteration, pertaining to immovable property is a works contract, and works contract is a supply of service contract. Clarity. But pertaining to movable, we are back to dominant intention test. Whether you want to buy goods or you want to buy. Take next example. Let's say AC with installation. AC with installation. So tell me, what is your intention? So AC, right? So AC may be taxable 28%. Installation 2,000. Let's say AC 40,000 rupees and installation 2,000 rupees. So 42,000 is being charged consolidated. But your intention is not to take installation services. Your intention is to have AC in running condition. Am I clear? Then it's a composite supply. 42,000 will be taxable at the rate of 28%. So what happened? Tax planning starts. We may bifurcate the contract. Supply of goods separate and installation. So all this business opportunity coming back to tax practitioners. And this may be 40,000 and 2,000 rupees. It could be a case of 40 crore or 2 crore. So I'm only giving food for thought. Having said that, now let's move to the next component, which is important one, and we can just highlight employer-employee. I have done it, so I will not touch base. Schedule 3. Schedule 3 talks about 6 entry. One is employee to the employer. 2 talks about services by court or tribunal. 3rd talks about any function of MP and MLA. They are so privileged. They are neither supplying goods nor supplying, but whatever they are supplying, we all know better. So they are out at all time. MP, MLA ban jaiye, enjoy 2 rupees dosa. Nevertheless. And one and foremost for everyone. At least they thought of this is common to them as well. Services of funeral, burial and crematorium. At least they will go and I will go. We all will go. So no service tax, no GST. Sale of land, of course, good one. Not chargeable. And sale of building after completion certificate. If any building after completion certificate, it becomes immovable property. In that case, it is neither a supply of goods nor supply of, but any consideration or any agreement entered prior to completion certificate, then service tax applicable and GST applicable. Actionable claim is a very interesting one. They are saying actionable claim is neither a supply of goods nor supply of. And look at the way drafting is being done. What is the goods definition, you know? Goods definition. Goods definition means every kind of movable property. Look at the definition so that I can take you along. Composite mixed, I have done it. So I'm not showing what is composite, naturally bundled, not naturally bundled. It would be given to you. Don't worry, this PPT will come back to you. Don't worry. You will be given this PPT. Dominant intention test. Look at the goods and services definition. Goods means, yes please, sir. Goods means every kind of movable property other than money and securities, but includes actionable claim. So actionable claim is included within the definition of, and now this actionable claim is excluded. It is neither a supply of goods nor supply of services in Schedule 3. I do not understand the intention. Why they have included here? If it is neither supply of goods nor supply of services, why they have included within the definition of goods? And whether we can say external claim is a goods, at most looks like to me is service. But that is how the drafting all about. But what happened when I look at the definition and discuss packaged software versus customized software? Goods means every kind of movable property other than money and securities. So securities markets are free, but includes actionable claim. And what is the definition of service? Service means anything other than goods, money and securities, but includes any transaction in money. So my only point, what happened to packaged software and customized software? Customized software continue to be a service contract. What about packaged software loaded on a CD and DVD? Whether clarity has come to me and to my mind, this point is still open. Packaged software which is loaded on a CD and DVD continue to be goods. So what happened? This kind of scenario which we wanted to have clarity, now dominant intention test which was done away, now back to GST regime, and that too now they are talking about goods or services or both. Article 366(29)(a) is still continuing in GST. So I'm only saying that whether GST going to really give the clarity, looks like to me clarity is not coming out. Clarity is not coming out. But this is what goods and services. Let me do case study. Are you ready to do case study for goods and services? You have seen the definition and you have to say it. Every kind of movable property, part of goods or service? Sorry. Part of goods. Growing crops, grass, things attached to forming part of land, part of goods or services? Anything other than goods, part of service or goods? Money, part of goods or services? None. Transaction in money, part of goods or services? Who said both? Don't say both. Actionable claim, part of goods or services? Goods. But again excluded Schedule 3. Securities, part of goods or services? None. Alright, so you have done this part as well. Composition scheme, the last component of my presentation, and I will take few minutes and conclude my presentation. Composition scheme is available wherever aggregate turnover is less than 50 lakh rupees, but it can be extended up to 1 crore rupees by way of notification as decided by GST Council. If you are a trader, 1%, manufacturer 2%, and supply of food along with the services 5%. This is what the rate. Condition, if you are taking composition dealer registration, you can't avail input tax credit and you can't charge tax on your output. So you will raise bill of supply. And restriction, who can't be composition dealer if you are service sector, except supply of food with the services, or you are supplying goods which is not taxable, or you are manufacturing notified goods, or you are supplying goods through an e-commerce operator. You can't take composition. Or you are engaged interstate outward supply. Outward supply. This is what the brief summary of composition dealer provision, but let me touch base one important parameter which was discussed yesterday, and it was alarming point. Levy section is section 9. Levy is known, there shall be levied a tax on intrastate, CGST and SGST, and on interstate. What is this UTGST first? Union territories without state legislature continue to work like within union territory transaction with no state legislature, they will charge CGST and UTGST. Am I clear? If transaction happen from one union territory to another union territory, transaction would be IGST. Any doubt? One state to union territory? No doubt, right? And the credit mechanism, as usual for SGST, similarly you have to follow for UTGST. But what is the section 9 subsection 4? This is the point we have represented from PSG Chamber of Commerce. Section 9 subsection 4 says, if any registered dealer purchasing goods or services from any unregistered person, then there would be reverse charge method in the hands of registered person. So this looks like very simple, right? Why they have made this provision? Can you give me the answer? Why this provision? They wanted everyone to come on TaxNet. I raised two important points yesterday on this point, and I said to Honorable past Chairman CBC, I said, sir, it would be double taxation. How come? The unregistered person, whatever he's supplying goods and services, must have suffered the taxation. He might not have availed credit because he is not registered. And again, when he is supplying the same goods or services to a registered person paying under reverse charge, double taxation. Do you all agree? First part. Second part, what is the relevance of this 20 lakh then? They are saying that registration is required only when aggregate turnover crosses 20 lakh rupees. What is the sensitivity of this 20 lakh rupees now? When I'm purchasing from unregistered person and any purchase is reverse charge method, then this 20 lakh rupees sensitivity gone. And what is the aggregate turnover 20 lakh, you know? Definition, aggregate turnover. It includes taxable turnover, export turnover, exempt turnover, and interstate supply. And exempt means what? Nil rated, exempted by way of notification, and includes non-taxable. So I do not understand what is this 20 lakh rupees they have kept and for whom they have kept. When everyone is coming on GST net with such kind of minute definition, I'm little surprised with no GST awareness program, how July 1 would be successful for all of us together. And this is the point I've raised. And next question, it was there in my mind which I posted to him. If this reverse charge, section 9 subsection 4, why they have brought this provision now? They could have brought it in a phased manner. They could have allowed trade and industry to settle down. And they could have brought this provision. But since this provision has come, what happened? We will not buy. And I said, being registered person, if I take 500 rupees stationery from Kirana shop, I have to pay reverse, not only reverse charge, per transaction wise, I have to raise invoice. And that invoice would be captured in my outward return to have liability. And then it would be auto-populated in case GST, ITC available. So not only paying reverse charge liability, you have to raise invoice, which would be captured in your outward return. Then it would be auto-populated, and then you see whether credit is available or not. So not only 500 rupees reverse charge liability, corresponding compliances. So what happened? Do we want to ask all Kirana shop to shut down? Because we would not be preferring to buy. But we have to support them. What is the intention? Just to get them on board? Put reverse charge? Not advisable. Let me conclude. Time is paused. I have extended my time period. So with this, I'm thankful to each one of you. Thank you very much. Thank you.